Hello, I'm Dan Barnes and welcome to ActivTrades News. This week we're going to be talking about Brazil's downgrade, the sell-off in emerging market currencies, the slowdown in global trade growth, and the increase in UK wages. Brazil has been downgraded by Standard & Poor's to junk status. During the 2002 to 2013 bull run for emerging markets, we heard a lot about the rise of the middle class and the development of infrastructure. However, Brazil's fall is bad news for economists, for investors, Brazilian citizens, and also for other emerging markets countries, which may well find themselves following the same fate. Secondly, we're going to be talking about emerging market currency sell-off. We've seen a fall in the value of the Russian, Mexican, Chilean, Turkish, and Colombian currencies since June 2014 by 20 to 50%. We've also seen a drop in the Indonesian rupiah and the Malaysian ringgit, down to their worst level since the 1998 currency crisis. We'll be asking what this means for investors and whether we're at the bottom now. Thirdly, we'll be talking about the slowdown in global trade growth. We've seen a decline in global trade growth recently. Typically, global trade growth grows faster than GDP. In the 1990s, we saw the start of what was called hyperglobalization, which was the breakdown of barriers, and so the increase in cross-border trade, which led to a significant boom in trade. That's now been slowing down. We'll be asking what that means for economies and what that means for currencies. And finally, we'll be talking about the rise in UK wages. For Q2 this year, the Office of National Statistics reported that wages were increasing by 2.9% over the previous quarter. That's good news, and of course, against a slowdown in the drop-off of unemployment, which was at 5.5% for Q2, same as for Q1, and was in fact down from 6.2% the same quarter of the previous year. This is possibly good news for the economy, but we'll have to find out. I'm going to be joined by Paul Wallace to discuss these issues. I'm joined now by Paul Wallace, expert trader, to discuss the issues of this week. So Paul, we've seen Brazil downgraded to junk status by Standard & Poor's. Which emerging market do you think might be next?
It's a good question, Dan. I think that we've seen Brazil has been downgraded and joined a rather illustrious club, where we've seen Russia, Indonesia, Greece, Turkey, that they're already part of that.
Yep.
I don't think it'll be India. I think India are okay, and in fact the Indian finance minister came out and said that they were in the best place to weather the storm because of all of the BRICS nations. Although you would expect your country's finance minister to say that.
They tend to be positive.
They tend to be positive about that. And so if I was a betting man and I had to make a call, I'd probably say that I'd be betting on South Africa to be the next one to join the club. They've been like tickling that soft underbelly of junk bond status for a good while now. And if you look at what's happened with the Fed, with the dollar and the South African rand, etc. And the country total, that's where my money would be. South Africa to join that illustrious club.
And so what does this tell us about the emerging market boom we saw from 2002 to 2013? I mean, was that bull run just a commodities boom in effect?
I think that the commodities boom was hugely influenced. I think we've had effectively especially in the last few years, there was a commodities boom and cheap money available, and between them, that kind of it created like an almost perfect storm. And you talked about Brazil being getting moved to junk bond status. I personally was hugely bullish on Brazil at the start of this decade. I thought it would be their decade. I really thought it would be Brazil's decade to emerge as a major market player.
Yeah.
Invariably, that has not happened, and invariably, they're in real trouble. And I think we see, some of the commodity currencies over the last couple of years, as China has slowed a little bit in terms of their demand for commodities, and invariably as the world gets ready for a US rate hike, that money has kind of flowed out of emerging market economies. I think I read somewhere like 60 billion this year has come out of emerging market equities this year, and it's invariably, that party is now well and truly over.
Yeah.
And now we're dealing with the hangover.
And of course, we are ready for the rate hike. I'm still waiting, Janet, if you're watching. So, looking at other emerging market currencies, we have the real. We've seen the Russia, Turkey, Chile, Colombia, and Mexico all fall since June last year by anywhere between 20 to 50%. The ringgit and rupiah are down to 98 levels. But do you think that we're now at the bottom of the emerging market currency sell-off?
I would probably say no if I was called to make a call on it. I've traded for a long time now, and I agree with what Paul Tudor Jones says, that the markets always overshoot to the top and to the bottom. So I don't think I would never say that you draw a line in the sand and say this is the bottom of that route. If anything, there's nothing I see on as a chartist. There's nothing I see on the charts that's telling me that the kind of that sell off is done with. So my own view is that I think that the dollar may go sideways or weaken a little bit for a couple of months, but then invariably that I suspect as the rate hike comes back on the menu, I think that will just we'll see some dollar strengthening from that, and invariably that'll have a knock-on effect on those emerging market currencies again and send them to new lows.
And are we in a currency war, or are we at the start of a currency war?
My view is that we've been in a currency war for a couple of years, in one way or another. After the financial crash, then invariably we had every country wanted based its let's say its future on an export led growth out of the Malays, or the painful place they were, and in order to facilitate that, one of the ways was that they were looking to devalue the currency, that beggar thy neighbour. And so invariably I think we already have started a currency war, and I said, one of my own mentors, and it sticks with me to this day, is that invariably there are three stages that you'll get a currency war, followed by a trade war, followed by a physical war. And I think that we've had the currency war, we've had sanctions come in. We've had sanctions in against Iran, but that's different. Sanctions came in against Russia last year. There are elements of trade wars starting to pop up around the globe, and at some point this is all going to go kinetic. That's the way it works.
Sure. I mean, before it goes kinetic, do you think a global recession is likely?
I believe something's going to happen. I was talking before, and I said I was chatting to some institutional traders over the last week, 10 days, about their experience of what's going on, what they see happening, and all of us are a little uneasy. There was a lot of sucking of teeth going on. I can't put my finger on exactly what I think is coming, but my own belief is something is brewing, something's about to happen, and I think there's been asset bubbles, speculative bubbles for the last few years, based upon a lot of that cheap cash that has been swilling around the world, and invariably, had Janet started to hike those rates last week, that would have been enough just to deflate some bubbles and pop a couple of others, and then invariably, I believe because of the way the worlds are so interconnected these days, that invariably has a domino effect. We've seen that before, time and time again. So something is coming, but I can't really. I'm afraid I couldn't put my finger on exactly where or what. But keep your powder dry.
Sure. So, and we have seen a slowdown in global trade growth. What does that mean for the global economy? What does that mean for currencies?
Well, I think that kind of a slowdown in global trade is the sort of thing that makes people nervous. It's the sort of thing that makes people retrench. It's the sort of thing that makes people start to put barriers. And invariably, then we get that stage two. Don't we get that? We get a trade war. The likelihood of that happening. Invariably, then, with the effect of the knock-on to currencies, I talk about. One of my own, talking from my own personal perspective, I spend a lot of time living in on the beach in Dublin, and so I get to see how that country has effectively it was clattered completely by the crash and the bailout, and invariably, as I've said many times, Ireland is an Atlantic nation rather than a continental European nation. And so I think they're growing at like 6% or something. They said the last year. It's not boom time like the old Celtic tiger, but it is, as they say, a bit of the Celtic tigger at the moment. But part of their growth has been because the US and the UK economy has risen, and because they are an Atlantic nation, that has lifted Ireland, and invariably they have also had that kind of that double bonus because they've had a weak euro against both sterling and the US dollar for the last couple of years. So it's effectively that has given them that kind of a double whammy. So I see that Ireland has effectively benefited from that over the last maybe 2 years or so. But I would also see that's the kind of thing that that's the kind of like a microcosm of what I think will happen across the world in terms of should global trade start to slow down. It'll take the wind out of the sails of a lot of these smaller nations and emerging market economies, and it will just add to the pain that they're already experiencing.
Sure. Okay. Well, in the UK, we've had some good news in Q2, which is that we've seen the average earnings increase by 2.9%. In addition, we've seen unemployment has gone down compared to the same quarter in the previous year from 6.2 down to 5.5%. Stayed steady from Q1 from 5.5%. Do you think this is the uptick, the start of wage growth in the UK, perhaps?
I do. I actually generally do. I think the UK economy is actually a lot stronger than perhaps maybe we're giving ourselves benefit for.
Mm-hmm.
You know, clearly there are always variables, etc. But I think generally, I think the UK economy is strong. It's I also think it's pretty resilient compared to a lot of our competitors and a lot of our neighbours. And so I don't think we're in a bad position to give ourselves a little pat on the back on that. And with that, it's a case of that. As that growth has happened, we'll see an element of wage growth and and pay, etc. And I don't actually think that's a bad thing. I actually personally, I don't actually think that's I don't think that's a bad thing at all.
Sure. And does this revive the prospect of a rate hike for the UK?
Yeah, I think that's happening. That's going to happen at the moment today. I think the thing for Mark Carney is a case of I don't think he wants to raise it before the US.
Yeah.
But invariably because Janet's taken a little bit, she's got off the bus for a couple of months. I think then invariably Carney starts to think. Am I going to be pushed before anybody else? So I still think there will be rate hikes, but I personally don't think they'll happen until 2016. That's if they happen, it'll be 2016.
So, Paul, looking at the week ahead, we have France. The French Flash Manufacturing Purchasing Managers Index, the PMI index, is going to be released on the 23rd, and that gives us some indication of how France is doing economically. On Wednesday as well, we have Mario Draghi talking about monetary policy to the Monetary Policy Committee in European Parliament. And then on Thursday, we have Janet Yellen talking in Massachusetts, and she's probably going to be talking about what happened. What's your view on the forecast for the week ahead?
Personally, in terms of that French Flash PMI, I don't personally take a massive interest in that individual, but looking at the bigger picture, as I was saying before, I think France has escaped a lot of scrutiny because there were bigger problems in Europe, and I think that as I said, I think France has got away with it so far, and I think so that there will be an interest in it, but it's not something I personally take a massive, it's not something that kind of would drive my own decision making in terms of trading the euro. It's just a personal view in terms of, there's France has flown under the radar. They've got away with it so far, but invariably, I still think there's a fair few skeletons in that French closet to come out.
Sure.
With regards to Draghi and his speaking, I think that he will be. I think he'll be disappointed that Janet didn't pull the trigger last week.
Like us all.
And I think that what we've actually seen, if you look at those markets, the euro and the yen have actually strengthened over the last couple of weeks.
Mm-hmm.
He won't be overly happy about that. I don't believe, and so I believe that he will suspect, I suspect he will either extend or increase the kind of the European Union QE program. That's what I think.
Yeah.
And finally, for Yellen, I think Yellen is going to be on Thursday. It'll be a little bit of an awkward session for her because it's almost like she was the girl who promised a date on Thursday night and didn't turn up, didn't even text to say she wasn't coming, and so because the rest of the world were all dressed up and made up and ready to go, and she didn't turn up. So I suspect it might be an awkward session for as she explains her reasoning for why she's done it. I don't actually blame her for doing what she did. I wouldn't wish to be in her position or wish to have her job at the moment. Because everything is on a bit of a knife edge. I suspect it'll be. I suspect she's going to get a little bit of a tough time for the next couple of weeks. I think.
Sure.
It goes with the job.
It does.
Yeah.
Paul Wise, thank you very much. This has
Pleasure.
been ActivTrades News. We look forward to seeing you next week.